This company give you exposure to the mass surveillance / monitoring / big data gigatrend. First off, read this disclaimer carefully. Okay, in this video we will look at a very interesting theme under these zeitgeists, which I call mass surveillance. You can see that it is about doubling the performance of the S&P 500, so quite substantial outperformance. If we go here, you can see that the performance between the companies varies substantially. You have some weakness here from Elbit, and then you have, monstrous strength here from like Digital Ally. In this video, we will specifically look at Nice Systems. So they are in what we can call the general surveillance business. As I think you would agree, mass surveillance is a very powerful trend. Okay, so it's huge. It just is huge, and this is one of the major companies. Okay, so a nice, very interesting choice of name. They are rather diversified. So they are into, the customer experience monitoring, robotic process automation, fighting financial crimes, and powering public safety. Okay, so let's just read a bit from their About page. So, transforming experiences to be extraordinary and trusted. When the world's leading companies want to improve their business performance, increase their operational efficiency, prevent financial crime, ensure they're fully compliant, or enhance their safety and security, they talk to Nice. Yeah, here's what they do when it comes to powering public safety, solving today's digital evidence and incident information management challenges. 20 million plus digital evidence items, 50,000 plus public safety professionals using the Nice platform. Okay, so that's one of the things they are doing. Let's also look at fighting financial crimes and this, which is their major categories. So when it comes to financial crime, they have systems that detect, prevent, and investigate money laundering, fraud, and compliance violations. When it comes to robotics, okay, like that. Building tomorrow's workforce with robotic flawlessness and human empathy. So discover new automation opportunities, empower employees, improve service. That's a strange wording. Get the full value of integration, scale up with unmatched experience. Of course, this is obviously a very powerful trend as well. And when it comes to customer experience solutions, CX1 delivers a comprehensive, agile customer experience solution for your customer service on the world's #1 cloud-native CX platform, powering a digital-first, hyper-personalized, and adaptive environment for both consumers and employees. So basically, Nice gives you exposure to a lot of powerful trends. But the general theme here is collecting data and finding trends, basically we Okay, so this is the seasonality of the Nice stock. Nice is the ticker. You can see here that we are currently in August. The average performance is a minus 2-ish loss. So August is, it's not a very strong month historically. Even if we go further back, it is literally actually the weakest month. That's interesting. So based on all the data we have here, August is the worst month. You can see that September, basically the later part of the year, is one of the stronger periods here for Nice. So that's the seasonality. Let's compare it against the S&P 500, which we have as the benchmark. Okay, let's look at the data here. August, a bit of a mediocre month, but you can see here the performance here, September, October, November, and December. It usually Nice outperforms the S&P 500. So that's interesting. So that's some data points. Let's look here at the charts. Weekly data points, and we can actually go pretty far back. This company, and the stock has been around for some time. So throughout the entire history here, going all the way back here actually to 1996, we do have a 4,260% gain. Notwithstanding massive drawdowns, so let's actually look at these drawdowns. But that's the dot-com bubble, so that's kind of a different thing. Let's look at this sell-off right here. This was a minus 70-ish, almost approaching minus 80% loss. So it goes to show you that some of these, very powerful trends, the stocks, they can be extremely erratic. They can move very huge. Long term, you see here, it's been working out. But there's been some very substantial drawdowns. And this is one of those things you just have to accept if you're going to invest in these companies that are giving you exposure to something that's happening now but will happening even more in the future, meaning there is uncertainty. If you do not want that kind of volatility, then you can of course own some utilities and established big consumer staples and conglomerates, but you will never be able to massively outperform the market if you do that. So that's kind of like the decision you have to make as an investor. So look at this pullback here, all of a sudden minus 14%. So basically when there is a pullback for Nice, it usually is a bit significant. If you look here across multiple years, corrections are rather common for Nice. It moves in these cycles. The cycles, they do differ a bit, but you can quite clearly see that we have been in one massive upward cycle. We basically have not really had a pullback, meaningful pullback like we've had many times here in the past. We are way above, as an example, the purple 20-week moving average, which is one of those classical pullback moving averages that Nice likes to use. It also uses some of the even longer term moving averages. So basically, we are way above the moving averages. We've seen a monstrous gain in a very short time from this low to this intra-week high, 105%. Nice has benefited, of course, by the need for more surveillance due to the George Floyd situation, which will be, the reaction to these kinds of situations will be basically more surveillance. So that's just something to be very aware of. But that's priced into the stock at this point. Hence, even though there could be more upside for Nice, here, if I were forced to put on a position, I would feel more comfortable. I wouldn't be that comfortable being like bullish, entering a new bullish position right here. I would want to see a bit of a pullback. So Nice could be a nice stock to get on a pullback to one of the more slower moving averages, like maybe the 20-week moving average, at least as if we see that it uses it as a support level, because we are overbought here on the weeklies as well. It is bullish to see that the accumulation distribution line is corroborating the rally very nicely. So there are buyers for sure. It's just a bit overextended, so we are very due a pullback. Long term, it's been more beneficial to be long Nice than short, but you could quite clearly also make money being short. And one of the best times to be short, that's when there's been some kind of blowout top, like a bit of a euphoric rally. There is very interesting. Oh no, this is the XOP. We need to change this. Oh, we need to change this. We need to go back to its buy. Like this. I'm looking at the correlations here, and the correlation with the S&P 500 is 82% positive on the weeklies. If we jump here into the dailies, there's a 70% positive correlation, so there's a decent link here. You can see here, if you look at the long history here for Nice, the stock doesn't like to be overbought nor oversold. So the RSI is rather reliable as an indicator. Hence, given that we have recently been overbought, and all of a sudden, boom, the sellers step in. So that's the psychology of the stock, which suggests that there could be some pullback here on the horizon. We are way above all the moving averages, so a pullback would just be a healthy thing. Okay, so that's the technicals. If we look here, let's look at some other metrics. So here we have Finwiz. You can see that it is auctionable and shortable, so there are some shorter term bearish strategies that could be used, or to protect a current position. Even though clearly the long term trend here is bullish. You can see here also with the trend lines that FinVisp draws in, we did blow out above them. So we were really overextended. Price book and PEG is quite extended, and the PE as well. Very good performance though. Certainly been outperforming many of the major indexes. What I like to look at, of course, is the Analyst price target. So the stock is currently trading for $217.99. The Analyst price target is $224, and that's 3% above the current level. The stock was closing here at $209, so that was here. And if you look at this high here, like that, it was closing at $225-ish. Hence, the pullback is coming at a level that, it makes sense, also from, a more fundamental perspective. But the stock had gone too far. If you go to Saks.com, you see that they have a number 3 hold on a Nice style score, a D value score, so there's not much value here. C growth, C momentum is decent. They categorize it as industry internet software. That's a very broad category, but I guess, you could call it that as well. Market cap, 13.6 billion US dollars, no dividend. Okay, hence, to sum up my take here on Nice. Long term, I'm quite clearly bullish on this stock. It gives you exposure to a very powerful trend that's going to be, it's not going away at all. It will probably only increase. Well, it will only increase going forward. Just will. But the stock is currently very overextended, so this is kind of like a stock you want to get on a pullback. These levels are just very, very excessive. Okay, that's nice. That is nice. Oops. What happened here? Okay, like this. So let's have the stock chart blitz around. Let's look at Apple. Apple also, it's a stock that's really overextended. The trend for Apple, if you look here, throughout the history of this stock, it usually has pullbacks. Okay, that's how this stock moves. That's the trend. Okay, given that the history we have of this stock is that there usually are pullbacks and they can be quite significant, the stock is basically begging to be shorted at this point. I mean, obviously the bulls are in control, but given the history here, it is daring you to put on a short position. They are, splitting the stock. They're using that stock split. That tends to funnel more money into the security because it becomes easier. Then again, fractional shares is something you can get on a lot of platforms now. Hence, the share price, it was a big deal in the past. Like if you had like a stock that was like trading at like $1,000, it usually was like very like restricted to hedge funds and mutual funds and basically big players. But that has changed. And it's going to be interesting to see how much the stock split actually affects volume and new entrants here. So that's something to look at for. So that's Apple. We have time for another stock. We have United Health. Let's take that one. This is a stock that certainly moves in cycles, and it has been moving in cycles even recently. We do have a closing new all-time high here, so that's always a bullish sign. Yeah. All in all, there's strength here in the stock. It's been cooling down. We have a bit of a rounding-ish formation. Yeah, it's a big company. But the chart, as you can see, it is a bit more erratic. So this is one of those charts that it can be a bit more frustrating. You see here that the cycles, they also shift every now and then. But some of the more recent cycles, are they consistent? Let's see. Yeah, there is some consistency here in the recent cycles. Based on these cycle patterns, there is some suggestion for sure that we could have some pullback on the horizon. Okay, whatever you do, of course, don't fight the trend, and may the trend be with you.